What's up, YouTube? This video we're going to go over super microcomputer, ticker symbol SMCI. Over the course of 1 year, this company's up 242%. Year to date, 203%. Real quick, this company, give you a little summary of what this company does is they make completes server racks, storage systems, modular base servers, blades, workstations, full racks, enterprise data centers, cloud computing, artificial intelligence, and 5G and edge computing markets. So it kind of gives you an understanding a little bit of what they do. They just make products for, big companies that can afford these things, these big server systems. Um, So you can kind of see the right here off the top of the line, they've obviously got it advertised at the top to say that GPU, you got NVIDIA H100s, A100s compatible with these systems. I'm sure you can buy those and then they come or they can install them for you. And then I'm not real sure how their whole process works, but you can kind of get a quick idea of what their products are and what they build. Obviously this is a big deal these days, getting all these servers to run all the artificial intelligence and cloud systems and stuff like that. So it seems like they might be a pretty important player in the AI role. Now let's come over to the valuations real quick. We're gonna actually balance sheets. Check out the balance sheet. So there's a couple key points on the balance sheet right off the bat. Their gross margin fell from 17.6% to 17%. Not ideal, especially when your gross margin is already kind of small. You'd prefer to be, gross margin maybe 30-40% really. Um, but maybe they can work with that. Cash flows, um, they didn't have cash flows anywhere else on their balance sheet, which I found unusual. And they don't have their 10Q out yet either, even though they reported their earnings on August 8th. So this is the only area I found for cash flows, but their cash flows, they used cash last quarter of 9 million and they had capex of 8 million, so they burned through $17 million last quarter. Again, a little bit of a red flag there. You want to see positive cash flow company, not negative, so questionable there. However, the CEO here had some pretty positive news to say about their outlook going forward here. Um, they have record revenue of 30% year-over-year growth. Global leadership position in AI accelerated compute platforms. It's nice to see the AI, but obviously that's a potential, you know, hook, line, and sinker for some investors to say, oh, they're, investing in AI. I should get on that board too. But it looks like they could be a contender for sure. But they continue to see unprecedented demand for AI and other advanced applications requiring optimized rack scale solutions. Okay, good to know. Now keep coming down here. Here's just another little quick summary of more stuff they kind of are involved in. So here on their balance sheet, they've only got $440 million in cash. Their debt in total is 632 million. Um, well, short-term debt 474 million. So they've got just about enough cash to cover their short-term debts. So that's always a decent thing to see. But overall, in terms of cash to debt, it's not that bad. We'll come over to the valuation spreadsheet and type in our company ticker SMCI, and down here we get a return on invested capital. So I prefer to see 15% or more on return on invested capital, but in this case 14, that's that'll work. Future EPS growth rate of 23%. So the analyst only predicted 2 years out on this company of 40 and then 19. So I put in 10% just to kind of get this a better balance of an EPS. Otherwise, if I take out this, it kind of puts us at 29, yeah, 29.5%. So I'd like to see it a little bit lower. So 23% seems acceptable in this case, especially with the AI hype and all the everything going towards AI, and they're They've obviously got software and components involved in that. Revenue growth 39, 16, 19. Gave us a 24 average there for growth rate. And then we come down here, Peter Lynch fair value comes in at $263 per share. I got a couple multiple comparisons here. You got TSM, Logitech, and NTAP. I'm not familiar with. Gives us a multiple here of comparisons of $239 per share. Manual PE, it'll take this company 16 years to grow to its current market cap, which is pretty good. Price to book ratio, you got our total assets. They have zero intangibles listed on their balance sheet. Total liabilities, outstanding shares, only got 55 million shares. Price to book value here is 7.9. The average price to book is 2.5. So because of the recent run up, the price to book value it's skewed so like quite a bit. I'll pull it up real quick. So you can see over the course of the last year, it was sitting about two and a half, roughly three, and it's just exploded in the last, basically when the stock started, going higher, obviously, because now the price is higher compared to the book value. So this to me seems a little, skewed right now just because of the current run up. It's up 200 something percent this year. What do you expect, right? So the peg ratio today is 0.9. The forward looking peg is 0.54. It's fantastic. Um, Graham's valuation over here gives us a intrinsic value of $310 per share. Also, these corporate bonds on most of these companies, when this particular valuation, when corporate bonds are this high, it destroys the intrinsic value. Because if we put in 4.4%, let's see what this brings it to. So $360 per share. So I mean, it's $50 per share just by dropping it 0.7%. But regardless, being that high, it's still a buy. So come over here to the discounted cash flow valuation spreadsheet, and we got our ticker over here. We got all of our expenses and income entered in. Our market cap gives us a weighted average cost of capital of 10.4%. That auto populates over here with a perpetual growth rate of 2.5. And I only projected future free cash flow of 5% because their cash flow growth rate, their free cash flow is really terrible. They really haven't been, especially in this most recent quarter, was their worst one. Sorry, not quarter, year. It's negative $490 million in free cash flow, and not ideal. And analysts don't even have a free cash flow prediction on this, so I zero, and I'm like, you know what? Let's just give it something. I'll say 5% because of the potential growth it has. So that's what I gave it, is just 5% growth rate. It's going to be negative compared to with the weighted average cost of capital and the perpetual growth rate. So it's going to shrink, even though it looks like it's growing on here. And if we change this from, instead of negative, let's type in, let's say it's 100. And then, so I mean, it's still going to shrink, but it at least gives you a better idea, because this 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 particular valuation isn't going to work out because their free cash flows are not good. They're negative. There's negative parts. Some are better than other years. So this whole valuation is invalid really because it's not going to compute out right. So we'll just disregard this because it is not it's not going to tell us anything good really. So we come over here. We're going to do the 72 rule. Got SMCI. We have a lowest EPS growth rate of 23% is what we'll go with. Right here, I changed this to 10% instead of 23% because at 23% growth rate, it'll give us let's see here. If I type in 92, it gives us a future market value, a fair market value of $1,000 a share. So I don't believe that's true. I'm going to go with 10 because that's what I saw the lowest was for an estimate, which gives us a future EPS of, I had 25 in there. So then we come over here, future or fair market value is 287, purchase price of $201 per share. So then, oops, we come over here, we got our summary of this everything. We got our peg, here's the valuation, price to book, and then all of our, we took out our discounted cash flow, remember, because that wasn't, showing negative numbers, basically, a zero. So we eliminated that, and it gives us an average price of $275 a share with a 30% margin of safety, gives us a $193 purchase price for SMCI. So a couple quick takeaways from this company is it's undervalued based on fundamentals. Actually, it's more fairly valued really than anything. And then, it makes products included with NVIDIA. It's got the AI hype behind it a little bit. So it's kind of like I don't see this company as a long-term hold. I don't it The balance sheet is not strong. It doesn't have cash flows. Um, they've only got $440 million on the balance sheet. There's nothing here to be too overly excited about, in my opinion, based on the fundamentals. But let's hop over to the stock chart real quick. And as we can see, basically April, early May, this company just exploded from $9,500 a share to $350 a share with terrible balance sheet, even though it appears to be really well valued based on, you know, fundamentals. So if this company, honestly, you know, well, I mean, you can see it appears we're in this channel. It's very volatile, but if this holds right here, if I was to play this for, which would be a day trade, maybe a swing trade, I would put a stop loss probably about the 230 range here because we wouldn't want to see it get below this. If it gets below this, it's probably going lower. But put a stop loss in this range, and I'd probably pick it up right now on Monday and potentially ride this back up to the 350 area again. Um, the fundamentals kind of support that to some degree, not entirely because it's telling us we have an average price of $275. It's basically there. If it pulls back to 200, it's probably a buy. Buy it, maybe ride it back up. However, if it does break that channel, I'd be concerned because if it comes back down below this, we're probably going back down lower. There's not much to hold it up. There's no technicals here to say, oh, here's a support, here's a resistance area type deal. Really, all we've got is these two lines. We have maybe some support here. You can maybe draw a line like, you know, right here for support potentially, or that's really all you got. There's not a lot, especially when these run up 200% like that. There's not much to draw to say, okay, here's the channel, here's the trend, all that stuff. But that's my take on SMCI. Let me know what you guys think of SMCI if you're buying, if you're holding. If you would, guys, like, subscribe, and we will be back with more.